Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi, welcome back, everybody. Welcome back for another episode of my podcast. Unfortunately, I was a bit busy over the weekend and couldn't make it through yesterday. So, this is a rather slightly delayed podcast. Basically, last week the market is relatively one-way street, more or less. Somehow, Dow Jones just continues to show up. Not just Nasdaq and S&P 500, but as well as Dow Jones now is making new high. I think as of today, which is Monday the 8th, and it's continuing 200 points. So all three major indices continue to go up. So so this Joe Biden honeymoon period seems to continue its lucky streak. But there's a lot of noise in Asia, though, saying there's the market is gone extremely high and rather worried. But I think this is precisely why we need to think of this as a more of a continuation, because more people think the general market is too high, then the more the market will just move up. It's just people, big investor, as far as I'm concerned, is at the back try to squeeze out as many shorts as possible, because at the new high, people probably anticipating a drop like maybe like last year, certainly in February, March. You got a pandemic that spread across Europe and US, even though we heard about the pandemic in China and Asia back in December 2019. Not the market didn't really react to it until like 3 months later. So people looking at the recovery at the moment around the world is very sporadic. In Asia is full on steam recovery. In Europe and America is absolutely disaster as far as I can see. However, the stock market, due to the amount of money that the Feds have pumped into the market, has just continued to go up in US. And people in Asia generally scratching their head and don't understand what's going on. But I think a lot of, probably a lot of money from the Feds, I said, but as well as all the big boys in Wall Street are playing the games as well. I think one thing to have help them to continue to bet big in the stock market is Joe Biden 1.9 trillion relief package, and also Janet Yellen, who is basically the financial chair or something, basically is also voiced very dovish, and the Fed, Jerome Powell, is also very dovish in the sense that I will do more or less the message from America is we do whatever we can to help the economy, help the people who is suffering from the COVID-19 side effect of not able to go to work, and it just basically put more money in the economy, put more money into people's pocket, and it's just general feel good factor. But however, how long can this last? Nobody knows. But at the moment, everybody's just feeling, they got in America anyway, new president, lots of money going in. Basically, the Wall Street is very much divorced from the Main Street, even though lots of people is dying and lots of people queuing in food banks and stuff. And many people lose their jobs and things, and the market don't seem to take a notice. And that seems to be the case around the world. The only thing significant decline is perhaps in the UK. In FTSE 100 has gone down quite a bit, and it's still continuing going down. Not following DAX or CAC in Europe. So it's just basically continuation of the good time. That's what seems to be happening. But the other thing worthwhile to note is, of course, Reddit. They causes a lot of hoo-ha for the GameStop shares, and I said in the last episode, I suspect there's somebody else in the background, or maybe in Momentum Trade or some other bigger funds, trading to move the market. GameStop from about 20 below $50 to just about $400 in a matter of months, or about 2 months or so. So more likely matter of weeks. And I don't think retail investor had that much of power to actually move GameStop. I think there's something else behind the scene. And the more I investigate, the more I think so. It's more like a game of big sharks eating small shark in the hedge fund world, and then basically using the retail investor in Reddit as a front. This retail investor beating the Wall Street, be more fair, one up for the retailers. I think we all been used. That's just my feeling. All this front of retail investors gang up together on Reddit and then basically move the GameStop games up. I think it's more. It really maybe is a conspiracy theory, but I think somebody somewhere somehow planted a seed of information into the Reddit group of people, and slowly, the noises getting louder and louder, and then people jumped on and helped move the GameStop shares, which helped big hedge funds, killing smaller hedge fund who was the small one, which is heavily shorting GameStop, but the big hedge fund basically have one way or another. I think U.S. Financial Feds and stuff need to investigate. I think it's probably a lot of things go on behind the scene, and momentum trade comes in. Remember, momentum is just calculation. You see some movement, just jump on it, and that basically moved the market quite a lot. And the Reddit guys, they try to do that. The same thing for silver. But unfortunately, silver is a very different kind of fish. It's a much bigger market in one thing, and but it didn't stop. I think again, people in the background are just using the Reddit group as a excuse to try to drive the market price up. Silver on Monday shot up to around the almost $30 marks in the space of a day, and then unfortunately on the next day, on Tuesday, holding back down again, back towards the $26-27, and it just show how volatile things are. And I'm sure a lot of people make money in GameStop, as well as a lot of money being made in the silver. But one thing though, when you look at now, it's about a week now since the sudden shot up of the silver. It's also pulled the gold up a bit. Both gold and silver have sort of retraced some of quite a lot of the gains from early last week, and now it's back to a more reasonable level. And you see, gold is below 50-day and 200-day moving average, but silver is still above the 50 and 200-day moving average. Meaning to me is silver still got legs to go up. It might have get rid of all those people who jumped in on Monday, and this sudden move up and sudden move down, about $3 going up and $3 coming down within 2 days, basically within 48 hours. Basically did not stop the uptrend of silver. I think it is still holding up there. One thing about silver is obviously it's used for industrial purposes, for mobile phones and stuff. And I think the fundamentals of the recovery probably will help silver to be a bit more stable, less volatile than gold. And unless the price go below, I think 25 or something, I don't see silver any issue. We just continue bubbling up. But of course, the sudden gain on last Monday, is evaporated, and I think just continue to go up, but rather slowly, without the Reddit group. The other things is on the silver as well. Last week, after I did some research, apparently a lot of people, a lot of retail shops that actually sell silver coins. Rather than selling last week $30 an ounce, just like the spot market price, they're actually selling up to the $40 and per ounce of a coin, of a silver coin. And then some of the retail shop that sell silver coins basically ran out of stock because so many people try to buy the physical stock. I think again, because of the hype, they overpaid now for about $10. But I think they definitely at the end of the year or later in the year definitely show, as far as I'm concerned, they will be at least back in the break even, maybe a bit showing profit, because the main things I said that is because it's not predicting, just everybody can see the U.S. government is going to be heavy-handed to try to pump as much money as possible into the market, and basically that weaken the dollars, and anything weighed against the dollars is going down, basically going up, so to speak, whereas the U.S. dollar is going down. And I've been saying that since last year and early this year as well. And we just have to wait and see how it goes. But it just anybody can see that coming. However, as far as we're concerned, is basically the U.S. dollar is backed by the U.S. government. Confidence of U.S. government from countries around the world. But with Joe Biden coming in and President Donald Trump actually is gone now. The 4 years that, as far as I can see, Donald Trump, either you like him or not, he did make quite a bit of enemy out of friends and foes alike. And there's a lot of amendments that President Joe Biden have to make, and that basically make people wary of the U.S. politics and wary government, because anytime, every 4 years, they might get somebody now with, set up president that President Donald Trump can happen anytime. So who's to say in the next, after 4 years, President Joe Biden might not be able to continue, and then somebody else coming in, maybe somebody like Donald Trump come back in again, or himself coming back in again, then go make the whole political landscape going to go hoo-ha again. So I think U.S. lost a lot of trust during the last 4 years of President Donald Trump's term, and it will take some time back to build back up again. But also of the amount of money that U.S. is really pumping into this economy and to his people's pocket. I'm not saying they're wrong, but the side action is, the bargaining power of having U.S. dollars is basically weakening. Actually the amount of money U.S. dollars can buy personally is just slowly diminish thing, and that's just my 2 cents worth of it. I could be totally wrong, like gold, which is fair enough. I think gold continued to go up, but unfortunately it didn't because in terms of market reaction last couple of years or so. But that's just the price I have to pay. I follow my systems. If my feeling is my biases is wrong, fair enough. My system drive me. So silver, I'm still up. Gold is down, obviously, reverse, and then gone short at the moment, which I will update you in the next couple of minutes in my portfolio updates. But the other things also worth noting is Thursday and Friday. Thursday last week, UK Bank of England basically prepared the market a possible go negative rate, maybe 6 months or 1 year, but it's actually making some noises, maybe following Germany. And of course, non-farm payroll in US only about 50k, not as much as before, like years before or last year, before the pandemic. It's always like 140, 150 or 200,000 per month increase, slow increase, but this time it's only about 50k, so it's a lot less. So it basically shows again how the US economy is recovering slowly. It's not recovering, but it's rather very, very slow as far as I'm concerned. And all those people that is already on the dole, and we seeing benefit. It takes time for those people to get back onto the market. A lot of companies still, not basically employing. I think that the same thing UK suffer as well around the world. In the West as well, I think mostly for UK as well as for US, is when the government subsidies, however it is, get withdrawn, okay, whatever amount, people will again start feeling the pinch, like they don't have job or job get reduced hours, whatever. They can pay the rent, no more government help, and any delay of eviction of the houses or where they live will probably reduce or stopped. Then landlords can start going to court, evict people, because the resident, those people own a lot of rent, affect both residential properties as well as commercial properties as well. So and of course you get a lot more companies, small, medium-sized company going bankrupt because or if the government or we reduce or we remove the subsidies, then a lot more problems will happen. And we haven't actually seen those things yet. Like extra money from the market, from the government, stopping or reducing eviction rate of residential commercial properties starting to come in. And also in UK, I'm not sure America, but in UK they've allowed, because of the pandemic, they put in rules to allow borrowers for residential mortgages to have some sort of payment holiday. It's been more or less like for a year now, and once that, I think it's also middle of the year, it's also will be gone as well. So this triple whammy, I call them, will come into effect in UK anyway in the second half of this year. I think something similar will be happening in America as well. I mean, how long can the U.S. government continue to give money to the general public and pump the money into the economy? The economy is not really the economy engine is not really restarting, having problems. So I personally still see quite a lot of mayhem coming in later this year, maybe early next year, and U.S. dollars index it might have recovered a little bit to 91.50 or 91.70 area, but second half of the year, I definitely just can see things going down. Maybe next year, I don't know. But I will continue to hold gold and silver, and that's just my 2 cents worth. Anyway, next will be the update on my portfolio coming up. Okay, first off the bat is Apple. Is short term is sell, medium term is neutral, long term is a buy. No different from last week. Next is Amazon. Short term is a buy, medium term is neutral, long term is a buy. So again, same as last week. USD generally. This is no change as well from last week's sell. Short term, medium term is neutral, long term is a buy. There is, I think, Australia have reduced interest rate or something last week or something like that. US dollars continue to recover, and of course the Australian dollar, because of that, these two factors is weakening. But yes, Australian dollar seems to be under pressure, and definitely is economy having issue. On the reverse, New Zealand dollar seems to be holding up quite well, and of course last week they have this meeting and agreement with Chinese government to there's some trade deals and stuff. It's also definitely helping New Zealand dollar, which I don't track here, but on reverse on Australian dollars reflection, it makes it weaker. Next is Brent crude and WTI crude oil. Basically both of them are the same. Short, medium and long term still buys. Is this continuation slow pace, nice very slow move up and up, slowly up and up, a little cents here, a couple of cents there every week, is continuing for Brent crude. Remember back in last year April time, everybody think the economy is tanking because of the because of the pandemic, but also because of storage issue and whatnot, and the price of crude oil and Brent crude went down to like negative area, and all of that somehow suddenly all disappear, even though the economy is recovered a little bit, but not as much, and it's definitely hurting shale gas things in America. US in the US shale gas as well as UK Brent crude, but then now suddenly all this noise and news from the news media seems to have disappeared, somehow gone. Then you see the price of crude oil and WTI all going up slowly. So as far as I'm concerned, on this front is always stick with your system, no matter what the general market says. Your system say go short, and then if you say go buy, go buy. And last year, those people who stay short, when your system tells you to your trend for the system, will make quite a bit of money when a lot more than expected, I suppose, when the actual price of Brent crude and WTI went negative, and then subsequently when it reverses, and on this latest thing of a prolonged, very rather long, slow, painful, like watching paint dry kind of thing, but WTI and Brent crude is slowly making headway and going back up. I think that this one probably got legs, and we just continue. Next is DAX. This week seems to have changed quite a bit. The past week basically moved the price of DAX move up a little bit, and so overall the price basically short term, medium and long term is all going to buy from last week, which is a sell and two neutrals. So, yeah, the big movement last week early on, and also with Dow Jones as well, seems to have changed the picture a bit. So next is Dow Jones, of course. Short term is now a buy as well. Medium is neutral. Long term is a buy. So yeah, the continuation of upward trajectory of Dow Jones is definitely helping things. Next is FTSE. Short term is a sell, medium and long term is neutral. This is what I said earlier in the podcast. FTSE is one of the only, I think, the major indices around the world that's actually showing reverse in the Western Hemisphere anyway. So just have to wait and see. Next is gold. Short term is a sell, medium term is neutral, long term is a sell. Last week, early in the week, of course, the ready thing with silver have helped it move up, and then of course it's also helped gold to move up a bit, but unfortunately it dissipated very quickly as well. For gold though, it moved back down to quite a lot more, and of course continuing is a sell. So short term is a sell for gold, medium term is neutral, long term is a sell. Next is Hang Seng Index in Hong Kong. Short term is a buy, medium and long term is also a buy. So it's basically trajectory sort of following Dow Jones and continue to move up. So that seems to be the case. Next is Nasdaq, as I said earlier. The last week continuation to moving up, so make it short term. It's changed from sell to buy this last week to this week, and basically medium long term is also buy as well. So it's quite good. And same thing for Nikkei. Basically short term is a buy now. Change from last week from sell. Medium and long term still stay at the as a buy. Next is silver. Like I said earlier, the Reddit issue or effect on GameStop gone to silver, and short term is actually make it to sell now after it's sort of settled down, but neutral for medium term, but long term still buy. So as far as I'm concerned, for this time now, rather than silver is lacking, it's also didn't lacking behind gold. It also didn't go down as much as gold did last week, so it's still long term still a buy. So we just wait and see. I think both gold and silver at the moment just showing rather quite volatile movement. From my view, personally, when I see volatility move up and down so quick, so much, it's only one thing: the market try to find its place. Either find a bottom, find a top, or whatever. It just try each way and every way whenever it leads to. Just try to find a long-term trend, either up or down. So when the volatility suddenly increases, going up and down on a daily basis like this, it's a telltale sign as far as I'm concerned. So it's best to just watch on the sideline. Don't commit all your cash to it. Just wait until the market tell you to. That's one thing about trend following. We don't predict, even though like here on my podcast I have quite a bit of biases myself, like everybody else. But I stick with my system. My system say go. Sometimes even though it's really against my own personality, my initial biases, I have to follow the rules because that's what trend following is. Remember, we're not here to be right. We're here to make money. If your system have a positive edge, over time we make money for you. But the problem is you don't know which signal is going to make the money. So you have to follow every signals, and it could be difficult sometimes when that signal totally doesn't make sense to you logically, but your system say go the other way, and you must follow the other way. So same thing for basically for silver at the moment. So we just wait and see. Okay. Next is U.S. dollar against Chinese yuan. Continuation. The Chinese dollars offshore is just continuous strength. So sell across the board. Short term, even long term is sell. The US dollar index have recovered a bit during the week. They're gone to like 91.7 as much as I think last Thursday or something. But Friday have gone back down now towards just near the 90 mark. So as far as I see, is the Chinese dollar, Chinese yuan is really strong, even though the US dollar index have recovered somewhat. All it does just causes the Chinese yuan to basically go sideways against the dollars. They naturally get weakening the Chinese dollar at all. So it also shows that it's just basically continuation of, as far as I'm concerned, the market is holding things up, basically giving it a strong thumbs up for Chinese dollars because he really want to go China. With all this flood of money, like I said earlier, in America, and buying the U.S. Treasury bonds, even that also have increased in yield. But why the increase in yield? Meaning, when you see increase in yield in Treasury bond, means the price is weakening. So the basically yield actually increases. Why people do that? Basically, I think people in America or Western world, basically, in general, just take the US dollars, and dump it into Asia, especially in China when there's, recovery. Last year, we all know China is the only country that actually have a positive, GDP growth. Everybody else is negative, and in the Western world is quite bad. But in Asia seems to be better. So I think a lot of money actually in this case gone to China. Doesn't matter what Donald Trump said, get your try to get the U.S. manufacturers or people or investors to yank the money out from China. But Donald Trump can say whatever. People vote with their wallet and vote with their feet and keep on buying more Chinese dollars against U.S. dollars. So that's the trend just continue. Next is US dollar against Japanese yen. Short term is a buy, medium is a buy, long term is neutral. So this basically show Japanese yen is weakening against US dollar, and it's then about the 200-day moving average there. So we just wait and see if this weakening continue or not. Next is British pounds. British pound against Japanese yen or British pound against US dollars. They both are short term, medium term, long term is a buy. So even though I'm in UK, I have no feeling. I feel the market, the main street is not doing well, but forex for British pound seems to continue just move up. It's definitely not boils down well for its manufacturing with the Brexit, teething problem with Europe and around the world. With COVID-19 and everything else, and the economy is tanked just like America or a lot of places in Europe. I just don't really see the British pound why it's so strong. I mean, if you say it against US dollars, because US dollars weakening, fine, fair enough, but what about Japanese yen? And it just showed to me, basically, as far as I'm concerned, British pound somehow is continuing strength. So again, your system, if you trade British pounds, if your system say continue to buy and just stay by, even though it doesn't make sense to me. It doesn't really make sense, but that's what the system does, and that's what the system telling me. So I will continue to be along with British pounds against Japanese yen, or British pounds against US dollar. Next is Bitcoin. Short term is a buy, medium and long term is also a buy. So there's some fluctuation and so forth short term wise, but I think today is Monday the 8th. I think today it has broken the 40,000 mark, so it's making a new high today. Why is doing that? I have no idea, but as far as I'm concerned, system already turned and to a buy since last week, basically last Friday, and just Monday today, just continuation. So Bitcoin definitely turned the corner, and short term, medium term, long term is all buy for Bitcoin. Next is iShare 20 TLT ETF. Short term, medium term, long term is sell. Like I said earlier, Treasury bonds is increasing price. Increasing price. Sorry, it's not increasing, and reducing price and so forth. And basically, the yield is increasing. So less people is buying US Treasury bond and moving away from US dollar for some reason. It looks like that's the case into Europe. Into Asia, China especially. So the TLT basically reflect that and continue going down. Next is Tesla. Short term is now a buy as well. Medium and long term is a buy. So from last week short term was sell, but now this week is a buy for Tesla in short term wise, and long term, medium term is also stay at buy like last week. There's no change there. So Tesla is doing well out of all these cars in the car industry. Tesla continue to make hayways, even though it up to 700% last year after the share split 4 to 1 or 5 to 1. It still continues to strengthen, and this Tesla, I said it before, like a bit like GameStop. Even though not retail investor going in, through the Wall Street bets kind of thing, but a lot of people were shorting Tesla a couple of years back. They all suddenly gone quiet. And I remember about a year or so ago, it was CNBC or something, or Fox News said Tesla is the most short company in U.S. history or something, or NASDAQ or whatever. But look at what happened today about a year and a half later. Those people continue to buy, makes loads of money. And that's what you need to do. Sometimes just continue listen to your system. The system say continue to stay with Tesla. You stay with it and see, every other people make money out of it that way. That's why the main thing is always stay with your system. Your system sometimes give you a signal that doesn't make sense, but because you positive edge, over a long term you keep on taking the signal. You're essentially taking the bets, and over a long term you make money. Remember, we're here to make money. We're not here to be right in the market, in the stock market. Next is Australian dollars. Australian index. Short term, medium term, long terms also buy. So continue recovery, even though quite strange though, even though the Australian dollar itself is not making headway, but then Australian market seems to continue to become a buy. Even though a bit sideways, a bit choppy, but it's still buy. So that's how it is. The system say one thing, but you can't do something else. What can you say? So follow system. Last but not least is Alibaba. Short term is a buy, medium is neutral, long term is a buy. So no change from last week. There's quite a lot of speculation where what happened to Jack Ma, and when he actually showed up a couple of weeks ago on some video on YouTube or something in China, which he put on YouTube. Is he actually free? I personally, in my view, I think he's been put to the naughty seat, so to speak. Has been put there by the Chinese government to basically lay low, and I'm not sure if we are out in the house arrest or whatever, but I think definitely he is facing some tough decisions from the Chinese government for the outbursts they've done, but also the way that he handled the Ant Group, which could, if not looked after properly, can cause quite a big bomb, a financial bomb, and nuclear bombs, as far as I'm concerned, in China. So it's rightly the Chinese government take a hard stand on it, but the way they do it is very different from Europe, of course. There's different countries, so different rules. Just like your house have different rules than my house rule, and the Chinese just got to have their own rules, and one way is just to keep some people shut up, so to speak, and also keep them back to their places. So I think Jack Ma is definitely safe, but probably being asked to lay low or make to lay low. But for Alibaba share anyway, as far as the company is concerned, it's still strong. Remember, this Alibaba is sharing. It's not really buying and selling loads of things in America. It's mainly serving the Chinese market, helping the American or people from around the world sell into China. As well as buying things from China, but mostly selling into it because of this big middle class, and because of that, and also the use of Alibaba in as well as WeChat in China for the micro payments, online payments, those kind of things, and online borrowing things. I think Alibaba has definitely got very good fundamentals, but the market seems to have been volatile since Jack Ma suddenly disappearing for 2 weeks and all his outburst speech late last year. But Alibaba seems to have settled down now, still above 20 days and 20 moving average overall. Short term wise have jump up and down a bit volatile, but at least recovering. Medium term is still neutral for that, but as far as I'm concerned, this company is worth to stick into. So it depends on the system you use, short term, medium, long term. Just remember, stick to your system. Always remember, guys, we're not here to be right in the stock market. We're here to make money. Making $1 or £1 or making $1 million, £1 million is still the same. You're making money. Make sure always, like Warren Buffett said, don't lose money, or don't lose more than you actually put in on the bet, so to speak. More than that is definitely more than business that we shouldn't carry. And we are doing this as a business, and it's not just trading for fun. If those people are trading for fun, you can sure to see them 5 years later. Probably don't see them anymore. Probably gone bust. Like a lot of us are broke account until we actually realize we're not here just to play a game just for a game of high and low kind of thing. We're actually here to try to make money. Then you have to think more about your system, your process, and follow that system rather than follow your head. It's always your system come first. Okay, that's it. The end of the podcast for this week. I'll speak to you guys next week. Stay safe and bye for now. Ciao.